Reports are that there is a tax evasion claim of 200 crore rupees. The company has denied the allegations, I must say, but the stock still about 9% down. So those are some of the standout stories that you're seeing in the day. But broadly, Niraj, are you seeing some last hour sort of profit booking coming in or selling pressure coming in on what has otherwise been a pretty good day?
Yeah. So, some stocks may have come off, like yesterday's media winners, for example, which is not just Z, but Network 18, TV 18, etc. are all down in trade today. So that is part one. GMR Infra won the case against Dial, but has come off as well today. So that's the other thing. The Inox twins are down for second day on a trot. So some of these high-flying names have certainly come off. Let's talk about what to do in a market like this. Amardev Singh, Head Advisory at Angel One, with us on the show. And we'll also get in Pankaj Pandey, Head of Research at ICICI Direct, on the fundamentals. Gentlemen, both of you, thanks so much for taking the time out and being with us. Good afternoon. Amar, I'll come to you first. This Bank Nifty scare, and not really a big scare, but this sharp gash that we've seen in the last 20 minutes, does it prompt you to do anything, or you will let it pass?
Yeah, I would say if you look at the markets, clearly on the short-term charts, there is some sort of consolidation happening, and also there is more or less, if you look at the daily charts, clearly tells that there is some sort of pressure on the higher levels. So having said that, what we saw today was more of I would say it was a good run up, and then there was a sharp sell off which happened. And technically the charts were displaying that there is, on the short term charts, definitely there is some sort of I would say weakness or consolidation. Medium term and long term, they continue to remain strong and positive. And if we look at the advances versus decline, even now, as we speak after the correction from the peaks, still the advances are higher in terms of declines. So I would say that the levels to watch out for Bank Nifty at the current level somewhere would be around 47,150, 47,200. That's a immediate zone of support where we could witness some pullback. But again, higher levels would be sold into, because we are seeing this sort of consolidation. And also what we are seeing is that somewhere on the upside, 47,800, 48,000, that's a level where a lot of profit booking is also happening, and some short positions also are being built in. And if you look at the heavyweight stocks, be it HDFC or ICICI, they are also clearly indicating that the daily charts are not very strong. They moved into, if I look at HDFC, so HDFC has moved into oversold territory and close to support levels. So we could witness some consolidation, because these two have the maximum weightage in terms of Bank Nifty, and ICICI also displaying a similar pattern with regard to HDFC.
So would you take any trades, Amar, currently? I mean, I heard you speak about a lot of things, including the banking stocks. What are the top trades at this hour?
I would say I would look at the NBFC is one, NBCC is one stock definitely. I would look at it because it's very strong on the charts. We've seen some consolidation over the last couple of days, but again, there has been a breakout. So this is one stock one can definitely look at, because there's a long way to go, and the way the stock has been rallying on a significant volume. So if you look at the days where the stock has rallied significantly, there we see that volume and delivery quantity both have increased significantly as compared to the last 30 days or 50 days average. So that's a positive. Also on the medium term, intermediate term, and the long-term trend, that continues to remain positive. And if we go back in time, the stock at a point of time had made a high of almost 140 levels. So it's currently around 1991. So there is a lot of opportunity here in this stock. So one can look at NBCC buying at the current levels with a target of 104 and a stop loss of 83. And this other stock to look at is Apollo Tires. This is again one stock quite strong technically on the charts. It has been in for consolidation. We've seen some positive upside today. It's up by almost 3%. But ideally, it needs to sustain above the 475, 480 levels for any major or meaningful rally. So that's a level to watch out for. Sustaining above 475, 480, then the stock could rally towards the 500 mark. The stock has formed a strong base around, or support zone around 435, 440 levels.
All right. I just want to make a mention of a few sectors that are doing fairly well. The Nifty IT actually holding on fairly strong, even though you're seeing some amount of profit booking in the bank Nifty. Realty stocks having another good day with Godrej Properties up about 3.5%, DLF, Oberoi, Phoenix Mills, Brigade again doing fairly well today. The Brigade is off its highs of the day, if I see. Yeah, Brigade is definitely off its highs of the day, but overall have been having a good day. Pankaj Pandey is also with us. He's head research ICICI Direct. Pankaj, hi, great to speak with you on India Market Close. Let's begin with your take on the kind of selling pressure, some of it that we're seeing during close, and whether you see the momentum sustaining going into what is a very volatile week in terms of news flow. You have the IT results coming in, not very clear what's happening on the global news front. What is the kind of strategy you'd adopt at this point?
So, hi, thanks for having me. See, on the markets, our sense is that we are sort of consolidating in this range of, say, 300 to 400 point kind of range. So between 21,500 to 21,800 types. And last week, we had seen Nifty gaining by 1%, mid caps and small caps were up about 2 or 3 odd percent each. So I think markets have done well last week. Some bit of a consolidation at current levels, I think, should not be a cause of worry. I think domestic inflows have been quite robust, and which is why we feel that the multiples are not going to sort of structurally contract for markets. I think going forward, markets will largely deliver in line with the overall corporate earning growth of, say, 14-15 odd percent. So we have a net free target of 25,000. Now, near term, I think the bias will change if we cross 21,800 kind of a levels. Nothing much is expected from IT sort of numbers, so probably that may not really provide any kind of a big direction to the market. But yes, our sense is that you're seeing decent amount of sector rotation happening with PSUs or pharma sort of doing relatively better. IT, I think, probably is still going to sort of do more of a consolidation. And if any sort of positive news trigger comes by, I think metal is offering a good risk reward.
Pankaj, I just want to get a sense from you on another buzzing stock that we've been covering through the day, which is Z. With all of those flip-flops and ups and downs, now some clarification coming in from the company that they're still in conversation. Would you go in for a trade right now on Z, or you'd stay away till things are clearer?
I think it is better to sort of stay away till things sort of clear up, largely because, see, the Z-Sony merger has got all the necessary approvals, but the merger has been sort of delayed for more than 6 months, and with the possibility of timelines getting extended. Now, post-merger, or our overall sense is that combined entity will be a lot more better to sort of look at, because 2-3 things. One, if you look at industry, overall is sort of consolidating. Because we are already hearing the merger between, say, Reliance and Star, and if this duo also combines up, I think our sense is that you will see far more better ad rates. And typically, our sense is that second half is better for ad revenue growth rate. So I think this company has already struggled in terms of margins. So margins, which used to be about 20% odd, has come down to single digits. Our sense is that it might take 18 to, say, 24 months for these margins to sort of get normalized. But I think the combined entity will get some bit of a bargaining power and will have decent market share of 26% of the overall ad revenue share. And with a combined top line of 14,000 odd plus crores. So I think it will be better if we sort of get all the clarity, and then only we sort of take a call on the stock, because I think, like I said, it's been delayed for 6 months. We don't know what the extended timeline would be.
Okay. Some news flow, Tamanna, and suffice to say, Indian Airlines are probably safe as opposed to the issues that were thought to be.
Yeah, I mean, I'm just saying that news coming in, Bloomberg flashes right now, talking about Boeing saying that they want to check all their 737-9 Maxes. In case you've not followed that story, an Alaska Air flight soon after takeoff had its door open. Just imagine the horror of that if you're sitting in that flight. But world over, the FAA has recalled a large number of these specific kind of aircrafts. The DGCA is saying that out of the 40 in India of that particular type of aircraft, that's the Boeing MAX 737-9, they found no problem in 39, and one had a washer missing. Now, I'm not sure which one had a washer missing, but suffice to say, if you look at SpiceJet, Indigo, no issues at all. In fact, I want to extend that and just pull up some of those stocks. Anything to do with tourism right now is in another stratosphere. Interglobe, SpiceJet, let's look at IHCL, look at Easy Trip, look at Yatra. All of these, Indian hotels, any of them, Lemon Tree, extend to railways, IRCTC, all of them seeing a big boost right now. And may I hasten to add, one company called Praveg. Praveg is on some other trajectory. I'm not quite understanding what's happening here. You did a story today, Niraj, about the Ayodhya effect. And, it's interesting because it's something that's doing the round on social media for several days. But to think that this would qualify into an impact on companies' businesses, is sentiment driving these stocks?
And maybe some rationale as well. So if Lakshadweep tourism picks up, as you were telling me, they have presence there. They have the only tent city in Ayodhya. And if that does have, we have no idea, by the way, about the quantum of bookings that have happened. But if their tent city does have bookings, then that's earnings accretive as well. Remember, there's a low-cost model. It's not a brick-and-mortar hotel chain that they run. It's tents and essentially that kind of at the Statue of Unity, at Run of Kutch, etc., etc. So therefore, maybe they break even at 25% occupancy, who knows? But clearly a stock that is buzzing and just mind-boggling what's happening here, really. The trailing 12 months P, by the way, just before you go to me also, but the trailing 12 months P, Tamanna, for Praveg is 130 times. Of course, it's trading. So the futuristic earnings, if they pick up, because the management is on record saying that from 90 crores of sales, they will do 300 crores in FY25. So if they do that, then great. But trading 12 months is very expensive.
So anyone we've spoken to in the space, we've had conversations with Lemon Tree, IHCL recently, is very, very bullish. But, just the reason I talked about sentiment, I had a conversation with Easy Trip today, and that stock has been up. That was one of the first when this whole Lakshadweep fracas, Maldives, Lakshadweep thing broke out. They were the first to say, we're not going to sell any more packages to Maldives, chalo Lakshadweep. And when you talk to them, the fact is that there's one airline a day so far going into Lakshadweep, and very few hotels. Of course, this will change. Of course, Indian islands are beautiful. Of course, the infrastructure will come in. But there is time for this to happen. Yeah. And when it does, I don't even know if such tiny eco-sensitive places can handle the influx of Indian tourists. You're talking about a huge number and huge might when it comes to purchasing power. Yeah,
but I'm hopeful that between Andaman, Lakshadweep, etc., we get the bearings going. But so that is one buzzing stock. But okay, we need to move on and get in my colleague Mika, who's waiting by before we hit into that break with the other volume buzzers of the session. Mika, over to you. Good afternoon.
Good afternoon. So our top volume buzzer was Johnson's Control, which traded at 7.76 times its 30-day average and went to an intraday high of 8.5%. No specific trigger, but the company does stand to benefit from the latest amendments by the central government on the quality control for air conditioners components. Then we have Ashoka Buildcon trading at 7 times its 30-day average, went to an intraday high of 11.7%. This is the most the stock has surged in 14 weeks, and this was on back of multiple large trades. 16.32 lakh shares changed hands at a price, and 1.35 lakh shares changed hands at a highest price of 159.3 rupees. Then we have Trident, which rose to an intraday high of 9.75%. Now, Trident has been gaining for the 7th straight session, and it also scaled to its 52-week high of 52.85 rupees. The stock is up 33% in the past 6 sessions and has been gaining since a capacity liquidity enhancement announcement back in December, on December 29th. Then we have Polycab India, which is down 8.22%. It was trading 6.85 times its 30-day average. Now, this is the highest fall the company has seen since December 2022. And this came after media reports stated that income authorities have found evidence of tax evasion worth 2 billion rupees. And lastly, we have Galaxy Surfactants at which is trading high on large trades. 3 lakh shares changed hands at a price of 2,758 rupees, and the bulk deals totaled 82.6 crore.
Mika, thanks for that. Time now for a quick breather, but stick around. We delve deeper into the market movement and also speak to Bajaj Auto's Rakesh Sharma on the other side.
Welcome back. You're just about half an hour ahead of market close, and markets definitely off their day's highs. You're seeing a bit of selling pressure coming in, especially on the banking side. The Bank Nifty down not too much, less than about 0.5%. But yeah, you can see from that chart that it sort of fell off a cliff just a short while ago. What are the reasons for that? We're going to get into that. But I just want to focus on one sector which has interesting data coming in, and you're seeing positive responses pertaining to it. The life insurance sector data for December shows growth softening for all life insurers, barring SBI Life. And if you just look at it, the total premium of private life insurers is up 4.1% year on year, but SBI Life's total premium is up 21%. Year on year. Max Life's total premium is up about 18% year on year. That stock also up in the green. ICICI Pru Life's total premium is at 1,497 crores, up 3%. So a bit of a weak figure there relatively. HDFC Life's total premium is also up just about 3.3%, while Bajaj Allianz Life's total premium is up 3.5%. But the big one, LIC, has seen total premiums up 94% on the back of strong growth in group single premiums and individual single premiums at about 2,000 crore rupees. Let's just get a quick view from our guests at this point on how they view the space, and of course the ongoing weakness that we're seeing in the financial space as well. Pankaj, let me come to you first on your take on the insurance numbers and how you see this pack. Which ones do you like? Would you bet on LIC despite having the largest market share, which is just ceding quickly? Does it look like there's more on the table?
So I think on the life insurance space, our sense is that SBI Life has got a better balanced portfolio between, say, participating and non-participating products. And typically, their growth rate in the last 18-24 months have been relatively better than compared to peers. And that is the only stock which has done relatively better from a price performance perspective. And I think they continue to sort of do well, largely because I think because of the overall penetration, what they're aiming for across SBI branches. So I think that is, so this stock is something which we like. And I think LIC, we're not too sure at this point in time because there are a couple of things. While the government stake is still high, while they've got some time to sort of prune down their stake, but our sense is that LIC is still sort of traditional, very traditional kind of a player. So operational efficiencies are yet to sort of creep in, and which is where I think probably it might take a lot more time for them to sort of kind of deliver numbers the way private peers do. So LIC is something we would not really sort of chase at this point in time, but SBI Life, I think, continues to do very well. But within the BFSI space, what we like more is something like, say, the microfinance space, the likes of Tamanna or even MSME lenders like SBFC Finance. So I think these are the companies where AUM growth is expected to be a lot more higher, 35, 40% odd. And I think we like this space more within the entire BFSI as a space.
So Spandana Spurti definitely in the BFSI space is something that Pankaj likes. Amar, are any of these insurance names on your radar? And what do you reckon is the reason for the kind of weakness we're seeing in the Bank Nifty right now?
Yeah, I would say that if we look at, first of all, the insurance space, LIC is definitely strong on the charts technically, but it's approaching a key zone of resistance somewhere around 840, 850 levels. So any pullback in the stock towards 750 odd levels, that can be a good level of entry. And looking at the way Bank Nifty has corrected, I would see that it's more of the heavyweights like, for example, HDFC Bank. We've seen some sharp correction today. So that's, and that has a major weightage. So because if I look at HDFC Bank, it's not been able to sustain over the 1700 mark. If I look at ICICI Bank, it's not able to reach its all-time high of 1060, 1070. So that's a zone of resistance for ICICI Bank. And talking about HDFC, that again has resistance around the 1700 mark. However, having said that, what I see is that both these banks, which have a significant weightage in Bank Nifty, they are very strongly supported at lower levels. So for HDFC, somewhere around, I would say, 1600, 1620, that's a very strong support zone where it would find with some sort of support. And looking at ICICI Bank, again, ICICI Bank has got good support coming around the 950 odd levels. So it's not very far off. That's the reason we'll see some sort of consolidation in Bank Nifty also.
Okay, we slip into a very quick break. On that note, stay on Japan. We come back, talk to Bajaj Auto, prepare for the launch of the Vibrant Gujarat Summit, get in some closing strategies as well. All of that coming up. Stay tuned. Right, back with India Market Close right here on NDTV Profit. Now, something that we promised that we will get you, the voice from the auto space, the leading newsmaker, if you will, on account of the buyback and multiple variations around that in terms of the amounts and the acceptance. Mr. Sharma, Rakesh Sharma, ED of Bajaj Auto, joins us on the show. Mr. Sharma, good having you. Thanks for taking the time out. And we'll talk about the business as well, but it's great talking to you on NDTV Profit. Is the size and the acceptance ratio something on which people would have asked you about, that why is it that the size is X or whatever it is and the acceptance ratio being what they are? What is the rationale of coming with this size of a buyback at this pricing, sir?
Good afternoon. Indeed, that is the size is certainly one of the questions which has been asked to us throughout the day. And the reason why it is at 4,000 crores is because, the previous one was 2,500 crores. And we obviously, the board wanted to do something beyond that. Secondly, it's been a good year thus far for Bajaj Auto, and the outlook is also very promising. And this is despite us navigating a very difficult year in overseas markets, which is almost 40 to 50% of our top line. Despite that, the domestic motorcycles business, the three-wheeler business, the emergence of the new businesses, which is Chetak and Triumph, and the benign scenario on the cost front, we're all sort of combining to give us a very good and optimistic outlook for the future. There has been sufficient cash generated, so the balance sheet is looking strong. So when we put all these things together, we felt that it is important to reward our shareholders in line with this kind of performance and outlook.
Mr. Sharma, hi, this is Tamanna here. Really happy to be speaking to you on NDTV Profit. Can you give us a sense of promoters' participation in the buyback? What happens to the promoter stake? And what is the acceptance ratio that you expect?
So obviously the tender offer is open to the promoters, and they will be participating. Beyond this, we will have to leave it to the promoters. It is not being specifically discussed at the board meeting. It is left to the promoters' volition as to how they want to deal with this. And we have to look at it once the buyback is closed. At this point of time, it would just be no point speculating, because there is no mandate, there is no sort of guidance, there is no guideline which was discussed in the board. And it is a promoter matter. It is their individual preference, and we'll see how that goes.
Okay. And on the point of the acceptance ratio for retail investors in Bajaj Auto, can you tell us what is the kind of acceptance ratio? I mean, we're talking up to 10% is what's being talked about, 6 to 10%. But what do you expect, and what is the message through this buyback for your retail investors?
So for the small investors, as per the SEBI guidelines, there is a reservation, as you know, and we will, of course, obviously be in line with that. And again, the philosophy for us, not now, but from, let's say, a couple of years ago, was the recognition of the fact that there are different kinds of investors and shareholders over there. There is one set which is, very, very dividend oriented, and Bajaj Auto for a long time has been disbursing very healthy dividends, and we were looking after that aspect. There is a very clear dividend policy, but a couple of years back, it was felt that there is another kind of investor who also looks forward to appreciation in share prices and the capital appreciation. And therefore, we need to give ourselves multiple options with which to go back to our shareholders. That's why the buyback option was included as an option to reward shareholders a couple of years ago itself. And we had the first buyback last year. And this sort of gives us more flexibility. It gives us, we feel, a better outreach to different kinds of investors who have different kinds of expectations over there. And this includes institutional and retail investors both.
Okay, just one follow-up, and of course you clarified quite specifically that promoters are open to participate. It's up to their volition. But just to follow up there, Mr. Sharma, do you see any change in promoter holdings post the buyback, or at the end of it, do you expect it to be at the same level?
So, again, they will do what they have to do, but just on the basis of arithmetic and the relative sizes, we don't expect the promoter shareholding, the needle to move at all, or maybe very, very marginally. We don't expect much of a change there.
All right. Let's talk about the outlook for the company and for the two-wheeler space. Mr. Sharma, I'm keen to know, your thoughts on EV push as far as Bajaj is concerned. It's the next big buzzword, and what we can expect exciting in the pipeline for the year ahead.
Yeah, so we are definitely seeing EV as a very, very significant development in the mobility space. It is beyond a buzzword for us, and we have been putting in a lot of effort and capability building in the early phases, both in R&D, manufacturing, supply chain, and in exclusive front-end network. These are very, very EV-specific investments which have been made. Now, whether it remains at 5% of two-wheelers or it becomes 30%, and what duration this occurs or unfolds, we cannot sort of put a number on it, but we are very sure that this is going to happen. It opens up opportunities for us in the scooter space. We are not in scooters, and most of the EV transition is taking place first in scooters. It opens up international markets for us subsequently. And therefore, when you put all this together, it's a very big opportunity for us. We were, I must confess, maybe perhaps a bit slow on the supply chain side to get sighting on the right costs and availabilities. But once all that has fallen into place, you would have seen that there is a ramp up. We have increased our market share from 4% to 13% in the space of 6 months. And we've got some very ambitious targets going forward. Because right now we feel that the preparation phase is sort of over. The emphasis, I mean, you are always preparing, but the emphasis shifts from preparation to scale up. And that's what the phase we are in. So you will see us trying to push the boundaries further and further. As part of that, we will added another premium variant to it also. So there are 2 Chetaks in the market, and very soon, in a few months, you will see a 3rd Chetak coming into the market. And there is a full program which extends into the next 3-4 years. Some of it is blue sky thinking, for which we have got international experts working with us who are going to give directions to the new product program. So, it is something which is very, very seriously and furiously underway at Bajaj Auto.
Fantastic. So it's being described as Bajaj 3.0. Mr. Sharma, you've spoken about it in detail, but may I press you for some kind of specifics? How many sort of EV products do you see as part of the portfolio? You've talked about a 13% market share and an ambitious goal. Can you put a number to that goal, or give us a sense of, what the outlook really is to be a serious EV player, where perhaps some peers have had a bit of a head start?
Yeah, so, again, it's a fair question. However, we do not work in such a numeric manner in an emerging sort of a business. Our key focus is that, we should be in the podium finish. We should not have a very adverse competitive ratio. This is a marathon. We are not saying that we have to burn up equity and burn up cash and be just number one. But we certainly don't want to be number 3, number 4. We want to be in the top 3, so that, at the right time, as the market unfolds, there are also a lot of ambiguities in the environment, but as the market unfolds, we raise to that. So it's not as if we have decided that, this is the kind of position which we want to do. Having said that, obviously we are building capacity. Today we have now revved up our capacity from 5,000 units to 15,000 units. That's being taken up to 30,000 units, and it will be further taken up in due course. And we will see how the sales expands given this supply chain capability. And then we will see how it stacks up competitively, whether this lands up with us in number 1, number 2, or number 3 position.
Right, but podium finish, that means at least in the top 3. Thank you so much, Mr. Rakesh Sharma. Great to speak to you. The buyback is being well received so far, at least. Bajaj Auto stock has, I think, seen its longest winning streak in the last couple of years, and continues to be sort of well received through the day, off the day's highs, but definitely not doing badly at all. Look at it in the last 12 months, nearly 96% up. Let me quickly go across to our guests who are on the show with us today, taking us through towards market close. Few minutes off, but just a quick word first from you, Pankaj, on Bajaj Auto and the buyback.
So I think this buyback of 4,000 crores is a sort of a more of a tax efficient mode of giving back to shareholders. Materially, I mean, we don't see that stock prices should head towards 10,000 kind of levels just because the buyback has been announced those levels. Because I think our sense is when you look at numbers, YTD, Bajaj Auto is still sort of doing about 3-4% kind of a volume growth. The export leg is still sort of yet to sort of witness a meaningful recovery, and TVS is already sort of doing well in two-wheeler space, and they've been sort of doing well for quite some time. So while Bajaj Auto, no doubt, is quite capital efficient, has got one of the best margins, highest return ratios, but our sense is that beyond this buyback, we don't see that things are really sort of improving materially for Bajaj Auto unless the export leg of the segment sort of keeps picking up. Because I think on the domestic side, the rural segment has started to sort of look up. So that is good. But I think the export segment is still sort of missing, at least for the last December numbers if we go by. So from that perspective, we are not excited so much that it will go back to, or the prices are headed towards 10,000 levels anytime soon.
All right, unless you're participating in the buyback, then you have that mark for you. Amar, views on Bajaj Auto and the Auto Pack? Anything that you like at current levels?
Yeah, I would say Bajaj Auto definitely is very strong on the charts, but at the current levels, some of the indicators are in overheated territory. So rather, one should wait it out and should see how the markets trade over the next couple of days, because the volumes have been extremely high over the last few trading sessions. So that also implies there would be a lot of selling also that's happening at the same time. But overall, the trend remains very strong for Bajaj Auto. Among the other auto stocks, I would say Tata Motors is one stock which continues to be very strong technically on the charts. It's currently around 800 odd levels. So any pullback in the stock towards 750 odd can be used as a buying opportunity. Because the uptrend on the intermediate term charts or the long term charts, that continues to be very strong and firm.
Absolutely. So it's not just auto though, which is buzzing. I want to talk a bit about the consumption space as well. FMCG has been having a slew of weakness in the last few sessions, and that continues to play out today. Let's just look at what's happening to those key stocks. ITC, Nestle, HUL, Britannia, all have seen these concerns come in through their business updates over the kind of rural recovery that we're seeing, and you're seeing that persist today as well. Let me come to you, Pankaj, first on this point, whether you can spot outliers in that pack, because the broad theme is that you are going to be seeing a rural recovery. The question is when?
So I think for FMCG companies, our sense is that if you look at their margins are already at lifetime high for most of the players, which implies that largely companies are still not willing to sort of cut prices to sort of to trigger a revival in the rural demand. Now, I think even from the business update perspective, most of the companies will deliver mid-single digit kind of a growth with margins largely remaining and quite decent. Our sense is that this space is not really going to sort of outperform the market. What we would structurally like is more of food as a category, because that is one space where probably you will see a lot more opportunity or headroom for growth. the likes of Tata Consumer. So I think so we are very selective in FMCG as an entire pack, and we really do not think that even if the rural recovery were to happen, given the fact that valuations are already rich, the growth rates are not really inch up, or we don't expect growth rates to sort of inch up from say single digit to double digits. So from that perspective, FMCG might do well in times of volatility, but we don't see that them outperforming Nifty. I mean, in the medium term or even for a longer term.
Amar, anything that would be on your radar on FMCG, or is it something that you're avoiding overall all the way today? As far as FMCG is concerned, Britannia, your top loser on the Nifty, in fact, today, down about 1%, not too much, but Britannia, Nestle leading that pack. Asian Paints, to some extent, possibly more of a crude play rather than anything else, although could be a reflection of the consumption story as well. Amar?
Yeah, I would say amongst the FMCG, Tata Consumer Products, that still is, I would say, if I compare with other FMCG stocks, this is on a different trajectory altogether, in spite of the sharp rally that we witnessed when it broke out of the 850-900 zone. Currently, it's around 1100 odd levels, but technically and looking at the charts, the momentum is very strong on the long-term, intermediate-term trend. The short-term trend, so any pullback in this stock should be a buying opportunity. Ideally, the levels to look out for from where the stock is likely to bounce back is 1070, 1080 in the short term, where we could witness the stock correcting and then a pullback towards the 1180, 1200 levels. So this is one stock one can look at from a short-term trading perspective.
All right. A quick look at the healthcare space as well. A lot of buzz on Metropolis with their business updates coming in. That's one counter to watch out for. Narayana off their highs, raise highs. Narayana Hridayalaya is also another one. We had an interesting conversation today. That stock's still about 1.5% up. They're making a foray into health insurance, and I had an opportunity to speak with the management today. Profit is the last thing on our mind. Says Viren Shetty of Narayana Health. Why does he say this? Says someone who runs a listed company. Take a look at a slice of that conversation.
At this point, profit is almost the last thing on our mind. The most important thing for us is to prove to ourselves that this is something we can do. More health, less insurance. If you run it as an insurance company, obviously you're going to do things like deny people with pre-existing conditions, find any reason to deny a claim. But we are in the healthcare business and we want to offer healthcare to all our customers. And we have a belief that even with someone who has a surgery, who has diabetes, who has a chronic condition, that condition can be managed. Now, it may be more expensive, it may require a lot more work, but that's what we as a hospital organization know how to do. And so if we're able to price it appropriately, we believe that even people with pre-existing conditions can be insured and taken care over long periods of time.
And another interesting conversation we had today was with Ease My Trip. They have cancelled all its packages to Maldives following comments made by Maldives Minister regarding Prime Minister Modi's visit to Lakshadweep. We spoke today to Prashant Pitti, co-founder of Ease My Trip, on this, and he says that Indian islands deserve to be one of the top tourist destinations.
Lakshadweep deserves to be known as a travel destination. It's just that the infrastructure right now might not be at the same level where we want it to be. But given the way this government functions and how quickly we were able to make Ayodhya's international airport in only 20 months' time, I wouldn't be surprised 5 years from now if Lakshadweep becomes one of the hot tourist destinations, not just for India, but for the rest of the world too. The problem with Lakshadweep right now is that there aren't that many direct flights connecting to the Agati airport. We are in touch with various airlines and requesting them to create segments which are directly connecting Lakshadweep to mainland India, Delhi, Mumbai, Bangalore, Chennai, and other places.
So, like we've been speaking, the tourism stocks are completely sizzling in today's trade and in the last few days as well. But I want to talk about, the flashes that you've probably been seeing on your screen, business updates for Q3 coming in from Prestige Estates, where sales are up 111% year on year and collections are up 36% year on year. We'll wait for more details from Prestige, but look at that last-minute spike coming in on the back of those business updates. It was, in fact, one of the laggards today, though the overall real estate pack has been doing well. Brigade was leading the charge, no pun intended, but had come off its day's highs. It's doing okay now, about 1% up. Godrej Properties is the big winner of the day, though. But Prestige is seeing a nice spike up on those numbers of Q3 business updates coming in. Let me go across to Pankaj and Amar on their take on the real estate play. And we ask this every few days, Amar, because the real estate sector keeps coming back with new highs. The index keeps coming back with new highs and new surprises. But if you had to pick 2 or 3 top players, listed players right now, where you still see enough of valuations and enough of potential on the charts, which one would it be, Amar?
I would say one definitely would be DLF. Because DLF, what we are seeing is that the stock has really is trading very firm on the charts, be it the medium-term, long-term charts, as well as the short-term charts. And also what we've been witnessing over the last, I would say, a few months is that there has been significant increase in both on the volume and the delivery quantity, and that also at higher levels. So we go back in time. So on 30th of November, it had witnessed significant volumes at around 630, 640 levels. And as recent as 4th of January, there was again significant volumes at high levels. So clearly tells me that there is more upside to the stock. And if we go and look back at the stock is still a far cry from its highs, which it had made earlier. So in 2008, when it used to trade around 1225 levels. So it's roughly around 70. So there's a long way for the stock to go, and the stock is very strong on the charts. And that this is one stock one can definitely look at. And I would say the other stock to look at is Godrej Properties. This is again one stock very strong on the charts. It did trade as high as 2,500 levels and corrected all the way to 1,000 levels, and then the stock is around 2,200. So this is one stock again one can look at from a trading perspective.
Okay, so Godrej Properties and DLF, we had a conversation, in fact, yesterday with the DLF management, and their new Gurgaon project was sold out fairly quickly. But the important takeaway, the average booking size, which is on an average about 10 lakhs for an apartment of that size, and ticket size was 50 lakhs over here. And they had a lot of interest from NRIs as well. DLF counter also doing decently in trade today. Pankaj, your take on the real estate pack?
So real estate has been the top performing sector last calendar year. I think the index is up about 80% last year. With this kind of a price performance, I would not expect this sector to sort of keep doing well from a price performance perspective. But from when you sort of look at sales data, it's quite robust. Also, this sector should benefit from the perspective that if the interest rates decline in the second half of this year. As of now, the premium segment is doing well. Probably the mid segment will also start doing well. Our topic has been Brigade, so all our target prices have been sort of reached. So we would not really sort of chase at this level. Probably we would expect some bit of a correction to sort of pan out, and then we would like. Besides that, I think Mahindra Life is another stock which we like, where the management commentary is good. I think the only part missing is that the execution leg is what we are looking, especially for the Thane property. So I think these are the two topics, Mahindra Life at current levels, and I think Brigade post some correction.
We've had interesting conversations both with Irfan Razak and Akash Johri of DLF, and I will play that out for you in a second. But before I do that, I want to come to Amar on your BTST ideas as we wind down to close.
Yeah, the one stock to look at is NBCC. So this is one stock one can definitely look at because it continues to be very strong. And what we saw the last 3 trading sessions was that there was some minor correction. Again, there has been a pullback today, and the stock has breached its earlier resistance, which was around 88-90 levels, and trading firm. So this is one stock one can definitely look at the current levels with a target of 104 and a stop loss of 83.
Okay, and anything on the sell side, or just NBCC would be your single BTST call?
Yeah, I would say that it would be NBCC.
Okay, NBCC is the call for the day. Stock already run up about 7%. But we were talking about the real estate sector, which is definitely boosting Nifty gains today. And we had an opportunity to speak with both DLF and Prestige. Listen in to bits of those conversations.
I think what has happened right now is what I'm seeing over the last year or two is that real estate, the residential real estate has become a priority. And what people are doing today are moving on onto better and bigger homes. They are looking at better developers. They are looking at secure investments. But most importantly, I think the trend is changing towards, you live once, let's kind of live it king size. And therefore, whichever category you may be in, you are looking at bigger and better homes. That being said, the other thing is that real estate is in the DNA of every Indian. I have maintained that for a long time now. You really can't take it out. I mean, the money was taken into other asset classes, but I think with the regulations and the business that is now being kind of in a certain way regulated with all norms, the confidence of the NRIs and confidence of other businesses, investors is now back.
I always believe that there is the sweet spot is always in the mid-income housing, and that will keep growing, while the premium and luxury also has caught up well. And I don't see any letting up, and I believe the demand will be quite sustained. And any new product in a good location from a good builder will always have a demand.
All right. So that was the word on real estate. But let's bring our attention to broader markets, which is looking like, they're giving up the gains of the day. The Bank Nifty down nearly 0.5% now as we move into closing. The Nifty IT is still holding up to some extent, but even the Nifty and Sensex close to their day's lows at this point. Just let's see if they manage to keep their nose above the water. 21,500 was the point at which the Nifty held on yesterday in trade. Not too close to that today, but that pressure definitely coming in the last bits of trade. So what is really dragging down the markets today? The Nifty media with the biggest hit, but yes, it's the BFSI space which is seeing the most pain, whether it's Nifty Finance or the Bank Nifty as well. Some pops of positivity there coming in because of the insurance companies which have had good numbers. But if I look at it overall, your PFC, REC, Shriram Finance, Bajaj Finserv, all of them seeing pain right now while going into close. But let's look at the top Nifty contributors, top Bank Nifty contributors to the fall today. And AU Small Finance Bank leads that list. IDFC first. HDFC Bank has been having a couple of bad sessions. Bandhan, though, seeing some kind of a pullback after yesterday because of a clarification they put out about regulatory investigations into some of those loans that they gave during COVID-19. They were specialized loans given out by the government to MSMEs, etc. There were queries about that, but Bandhan Bank has clarified that there's no specific query targeting them per se. So that's in a bit of a rebound, but not really much to write home about. The weakness definitely coming in from here. I just want to look at top Nifty contributors as we go into the last odd minute of trade and take a look at what is causing pain over there. Look at that. HDFC Bank weighing heavy on the Nifty today. L&T, some spark and some saving grace within the Nifty. We'll pull up that heat map also in a bit to tell you how we're going. The broader indices also look like they're going to be holding on steady relatively, but giving up some of those gains. FMCG are the big losers of the day. Britannia, Nestle, all of them there. Even HDFC Life coming off its highs. Adani doing okay. SBI Life is the one with the good numbers over there, and the insurance figures which have come out, the annual life insurance figures have come out. Some defensive placing there in Cipla. Auto's doing fine today. Hero and Bajaj perhaps leading that story, though TVS has come off its highs. But Auto is doing okay in today's trade. Let's take a quick last word from Amar before we wrap up our session for the day. Amar, looking at the close today, and we've managed to keep our head above the water. If I look at 21,500, where do you see the support coming in at this point?
No, I would say that technically, if you look at the charts on the daily trend, so there, it clearly was displaying that there is some sort of consolidation which is happening, and higher levels is likely to be sold into, and that's what we are witnessing not only in the benchmark indices but also in the major heavyweights. So looking at Nifty, I would say major support zone for Nifty is around the 21,350, 21,400 level. That's a very crucial and important zone of support for Nifty. However, again, on the upside, I would say somewhere around 21,750, 800, that's going to be a zone of resistance. So what's likely to happen is that we would witness consolidation. If there is a pullback towards higher levels, we'll witness selling pressure. If Nifty corrects to 21,400 levels, 450, or we see some buying interest coming in, because the intermediate term trend continues to remain extremely strong and positive. So that would not let Nifty correct significantly. Even if there is a correction, we'll see a pullback. That's likely what we are to witness in the coming days.
Okay, last thoughts, Pankaj, before we wrap on the markets today, on India market close. Decent close, all withstanding. Yes, there was some selling pressure, but you're seeing support on dips, isn't it?
Absolutely. So our sense is that market ideally should head towards a 22,300 kind of a levels. Obviously, this will happen only after 21,800 levels are sort of taken off. And this week, our sense is that it is going to consolidate in this range of 300 to 400 points. So we don't really see major reason for worry. I think till last week, 88% of the stocks were trading above 50-day exponential moving average. So market width was also quite good.
Okay. All right. Thank you so much, Amar and Pankaj, for staying with us through the afternoon trade. We've seen markets close, giving up its gains, but still in positive territory. Banks and financials weighed heavy on the Nifty, led by counters like AU Small Finance Bank, of course, HDFC also seeing some pain. That's it from me, Niraj, and the entire team which puts together India Market Close. Thank you for joining us, but stay tuned. A lot more coming up on the other side on NDTV Profit. Now